Hey, it's Dave again, your favorite mortgage guy. And I wanted to go over this concept, calculating closing costs based on what's on your loan estimate. So, you might get a quote in the very beginning from your loan officer. That quote may have it spelled a little bit differently than what's on the loan estimate. So it's a pretty simple formula. And actually, I think I can write on here. It's basically and I'll leave this at the top. It's D plus E, and this is actually page 2 of a loan estimate, minus lender credit in J. So I'm going to put a big J, and then maybe I'll put a small LC, lender credit. Well, there you go. Let's. I guess that looks good. JLC. Okay, very good. But so basically D on your loan estimate on page 2 is an aggregate or a total of A, B, and C. So the cool thing, they add it up for you, and actually each section is added up for you. Section A there 1295, section B 823, section C 1101, and boom 3219. So D, I did it the long way, but D is already there for you. It's 3219. So you would take D, you would add E, in this case 442. That's just what was in the lender portal. That's 3661. And then you would subtract any lender credit in J. Now, if you're actually paying any origination for the rate, you usually wouldn't see lender credit there. On this one, basically, there is a lender credit of $371, so minus 371. And so for this borrower, their total cost on this loan is $3290. And that is literally it. That's how you calculate it. Now, I want to make just a quick distinction here. The federal government came up with the loan estimate, not loan officers. Okay, so and the reason I say that is if loan officers came up with this, it would show your total closing costs, or J, section J there, where it says total closing costs 6809. It would show 3290. The reason that it says that is because, of course, it adds your prepaids and escrows to that amount. So oddly enough, those are not closing costs. Things that are closing costs are things that you're doing only because you're doing a loan. Like, let me just kind of give you an example. Section C there, premium for lender's coverage. What that is a lender's title insurance policy. If you watched a previous video, that's probably the extended coverage. So that's the lender's title insurance premium. Well, nobody walks down the street saying, you know what, honey, what we haven't bought in a long time, we haven't bought one of those lender's title policies. Let's go do that. Obviously, you're only buying that thing because you're doing a loan, right? Now, on the other hand, on the other section, let's look at sections F and G. Property taxes, insurance. You can't just turn to your wife or your husband, your spouse, and say, you know what, honey, I am just sick and tired of paying those dad blasted property taxes. I'm done. That's it. No more property taxes for us. Well, you can't do that, right? Well, that one you don't have a choice. So those aren't closing costs. Closing costs are only things that you're paying for because you're doing a loan. That's everything in, basically A, B, C, and E, which is why that's calculated. Obviously, we take the lender credit in section J because you don't always have to pay for the rate. Sometimes, you can take a rate that pays you a little bit or gives you a little bit of lender credit. So that's the case here. So I just want to make sure that that distinction is made. Your total of actual closing costs is not what it says in section J. That's just the total of everything, including your prepaids and your escrows. So just hope that sticks. And if you have questions, reach out to me directly. I'd love to help clear that up for you. All right, thanks for watching.